now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 15th. How about that? May 15th already. Terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with my favorite empowering beliefs. It is the holy grail to belief systems. It's called Become Your Own Electrician, the electrician of your beliefs, because beliefs have the power to create and the power to destroy. Only you and I, we are the ones that have that incredible, extraordinary, awesome ability to take any experience of our lives and create a meaning that disempowers us, or one that can literally save our lives and empower us to places we never even dreamed of. Think about it like this. There really is only one thing you can control in life, and that is the meaning that we give to something. You've really got to take that principle. You've got to understand that. That's the beauty of the markets we trade. We have bulls and we have bears. We have one that sees an event as a selling opportunity, one a buying opportunity. Your beliefs, the meaning that you give to events, well, you are in control of those meanings. I'm going to share with you an event that may be going on in the markets. It certainly has confirmed thus far today. Market's not over. Anything can happen during the day, but if it does confirm, well, I'll tell you the meaning that I'm going to give to it. And it is a big old grizzly bear out there. It's really pretty cool when you think about it, right? Because what we can or we cannot do, what we consider possible or impossible, really, it is rarely a function of our capabilities. It's more likely a function of our beliefs about who we are, and that matters because all breakthroughs begin with a change in beliefs. Doesn't matter what level you're at. We're always looking to strive for more. At least most of us are. Now, the most effective way to do that is to link massive pain, is to link your brain to massive pain of that old, disempowering belief. Because we need to know at our deepest level that that belief has cost us in the past, is costing us right now, and will continue to cost us in the future. And that is important. Because knowing what we don't want, that is just as important as knowing what we do want in life. And the reason is you want to get rid of that disempowering belief. You want to replace it with that beautiful, tremendous, pleasureful idea of adopting the new belief and where it's going to take you to. Because at any moment, a decision that you make can and will change the course of your life forever. Could be the next person you stand behind in line, sit next to on an airplane, the next phone call you take, the next phone call you make, the next movie you see, the next newsletter you subscribe to. Any one of these things could cause the floodgates to open. And then all the things that you've been waiting for will just simply fall into place. Folks, this is terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow trading up 132 points, trading out at 16,481. S&P down 18 points, trading out at 1870. Composite down 54 points, trading out at 4,047. Russell 2000 down 20 points right now. To the upside, Clovis Oncology, Gentiva Health Services up $5, VIP Shop Holdings up $5, Cisco up $1.50, Kindred Healthcare up 98 cents. To the downside, Priceline off $20, Alliant Tech Systems off 9, down 6%, Netflix off 2%, down $10, Google down about $6.80, Biogen BIIB off $6, Axiom Corp off $5. Our call-in number, 877-927-6648. Give me a call, folks. Now, in the first hour of the show, I was giving some riddles. I was asking folks if they could see what I saw. What would be the reason that would change Steve-O from his bullish position, which, by the way, we closed out of that bullish position yesterday. I mentioned that on the air, just to simply be full disclosure, if you will. And now, what do we have? I'm looking at the Dow Diamond. So if you're listening on your radio, your mobile device at TFNN.mobi, we appreciate that. Remember, you can catch the archive of this show here on Channel 10. Of course, the first hour is on Channel 9. Nice how we do that, 9 and 10. What I've got up on my screen here is the Dow Diamonds. Now, the Dow Diamonds today, let's take a look at what they've done over the course of the past 4 days. And I do want to say congratulations to, let's see, who had that? Fletch. I believe Fletch was able to figure out what it was that Stevie was looking at. Oh, so subtle. Now, trading session on May 9th, the Dow Diamonds get to a high of 165.78. Very next trading session, gap up. They create a nice little gap up there. The low of that trading session, by the way, 166.28. Make a higher high on the trading session of May 13th, little spinning top candle out here. Yesterday did make a reversal signal, so somebody had said, hey, maybe I was looking at reversal signals. And yes, it did make a reversal, so that was a excellent guess there. Not a reason, though, because that's just a tactic. That is truly not a reason just simply for me to go from full-out bullish to full-out bearish out here to become a grizzly bear, but very good eye to pick up the fact that that was a evening star reversal pattern. Instead, what we want to look at is take a look at yesterday's low, 165.92. Take a look at today's high, 165.87. Very difficult to see, isn't it? But there's a little gap in there. This gap creates what's referred to as an island top reversal. Now that is a strategy. Island top reversals are one of the most difficult patterns to make, especially at all-time highs. Sometimes you make them someplace else and then you move here, but this is a pattern at all-time highs. Does that have any relevance? It has relevance from two standpoints. One, if that is taken out to the upside, that just tells you how bullish and how strong the market is. When was the last time that the Dow Diamonds created a island reversal top? And that is an excellent question out here. So let's go take a look at them, because we had one that took place right here back in 2013. So we'll take a look at what it did here. 2013, the trading session was July 10th. July 10th, 2013. The high is 153.29 out here. The next low on July 11th is what? 153.71. A little bit of a gap out there, and then it formed a chain of islands out here, because you saw the diamonds here move sideways all the way up until the time frame of August 14th. Goes ahead and gaps down on August 15th, creates an island. Price came all the way back into the swing point, couldn't bust it down with volume out here back on June 24, 2013. That was the most recent island that was formed out there, and that says, yeah, I can get to the full-blown bearish signal. There also was what looks like another little island that took place out here, May 24th to May 28th to May 29th out there. There was an island. That also was what led to the move down into June 24th. That was really the message behind that move. If we go back further and we take a look at the diamonds out here, you go back to the big one, the Fletch in the den said an abandoned baby top. And the abandoned baby top, if you want to see what that looks like, that is this one right here that took place on July 7th. July 7th, it's a 3-candle session out here. You had a high on July 6th, 126.26. You got up to a low, gaps up the next day, but the low is 126.60, a little bit of a gap there. And then in the very following trading session on July 8th, that high was 126.42. That's your abandoned baby top. That led to the lows that ultimately led to a low back on October 4th, 2011 out here. Folks, these are patterns not just worth noting. These are patterns worth fearing. These are absolutely patterns worth fearing. We are at all-time highs out here. Likewise, if we see a close above the high of May 13th out there, 167.29, that actually can give you just as much information about the reversal and what's going on. Now, why is that important when we're taking a look at the Dow Diamonds out here? Well, if we go take a look at my monthly chart for the Dow, so let's put all this together. Let's take a look at the monthly chart out here. The Dow Diamonds have been traveling in a 15-year, 4,550-point consolidation zone. That consolidation zone was really set up back in June of 1997, when price was down around the 7,200 level. Makes a run. At this stage, we didn't know that there was a consolidation. Makes a move up to the January 31st, 2000 high. Market moves back and comes back, and this is what really began to form the consolidation out here. Makes a low back on October 31st, 2002. Gets down to 71.97. What happens? Price gets back up in this consolidation area back in May of 2006. Breaks through that level in October of 2006, breaks out of it, ends up forming a price relative strength divergent pattern out here on the monthly chart. That settled into giving a reversal. Price came back, tested the top of the old consolidation pattern, finally broke into it back in June of 2008. Price goes all the way back and tests the bottom of that consolidation. That consolidation, or 4,550-point move, actually completed itself right here in the month of December. So as we were coming into the end of the year here, when we had that big Santa Claus rally that began December 18th, it also was completing a measured move of a consolidation breakout here. So the work in the Dow to the upside with regard to consolidations is done with. It has no more work that it has to do to the upside. Now, let's roll forward to where we're at today, and it's only May 15th. A lot of time left in the trading session. But what we do know on the daily chart here for the diamonds, okay, and it's much harder to make an island reversal inside the futures. The index, so we can go take a look and see if they've made it. But there's enough evidence here when we take a look at the SPY and the DIA for us to really be paying attention to it. So if you are long the market, your sphincter muscle ought to be getting a little tight as we speak right now, not just because the Dow is up 150 points, but because of the strategic pattern that it has left in its path out here. Now, what we do have that is potentially in place here is we potentially have a price relative strength divergent top inside of the Dow. What does that mean? Excellent question. It means that at December 31st, when the market was making its high inside the Dow, the Dow out here, its price relative strength got up to 74.62. We made a higher high here in the month of May. Right now, that price relative strength indicator out here at 67.29. All that we really need is a bearish reversal signal. It's very easy for that to occur because the body of the candle from last month was so small. All that you really need to see at the end of this month is a close below 16,458.05. You're not there right now. You're at 16,469. A lot of time left in the month, but that big bearish signal that we're seeing out here is absolutely something to be extremely, extremely cautious of. Why? Well, why else? Well, when we go back and we take a look at the euro yen out here. Give me a moment to pull that up on the chart out here. The daily chart here has given us a nice bearish signal as well. Gave us a nice little Gartley sell pattern out here. It broke a rising wedge pattern, which typically resolves itself to the downside. It broke through a consolidation level that says that price, at least on a daily chart, ought to move to 137.38. I would make the case for you that eventually what we'll see here is we will see the euro-Japanese yen make its way all the way down to the bottom of its rising price channel out here. That would say that would be some fuel, some lack of liquidity inside of the market. Of course, the last piece, the soup du jour, is going to be the VIX index. Can the VIX index close above the 50-day exponential moving average? If it gets above that today, the good news is there's going to be a little bit of a bounce to let you in on the short side. Dow's off 141, S&P down 18. Be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 135 right now. S&P is down 17. So we were taking a look at the Dow Diamonds in that first segment out here. We switch over and we take a look at the New York Stock Exchange. Now, the NYSE also has formed a island top reversal here. If we take a look at the trading session of May the 9th, the high of that session, 10,611. Market gaps up on May the 12th out here. Gets the low there is 10,639.72. 10,639.72, that's the key number to be paying attention to. The high today so far, 10,636.45. Very subtle because, it's only a few dollar swing. It's an island top reversal. All-time highs on May the 13th out there. Now, if you've been listening to the show, you know that I've shared with you ever since early last week. I think when I was doing Tom's show last week when I filled in for Tom, the point that I made to everybody is that most folks think that markets all make a top at the same time. And that is just simply not the truth. The indexes make tops at different times. 2000, 2007, go back and study other market tops out there, and you'll see that that is not the case. Now, we've seen a high that came in the Russell on March the 4th. The NASDAQ Composite and the NDX 100, they've made their highs thus far. All-time high, well, not all-time highs in the composite. March the 6th, and 2 trading sessions ago, where we saw the we saw the definite island top at this stage here. The May 13th, we've got a high inside the Dow, inside the S&P 500, inside of the New York Stock Exchange out there. So everything is really in place, and now we get this strategic candle signal here, the island reversal pattern. Last time, by the way, that the Dow made a island top reversal happened to be December 31st. And, of course, December 30th, well, not of course, but December 30th, the high was 10,361 and change. The low was 10,366 on December 31st, and we came back January 2nd. January 2nd, the high was 10,352. There was an island top there. Led to a pretty decent correction where price went down to, in essence, come close to testing the 200-day exponential moving average. The 200-day exponential moving average right now inside the NYSE, 10,086. You are at 10,557. So the New York Stock Exchange has given you that island reversal pattern. If we go take a look at the S&P 500, let's take a look at the SPYs out here. The SPYs also giving a island top reversal. So that means we need to go take a look at what's going on inside each of the sectors out here. We take a look at the SPY. This is the daily chart for the SPY. You're going to see that same island top. That was where on May the 9th, the high of that session, 188.04. The low of the next session out here, 188.75. 188.75 being the key. If you take a look at today's high so far, 188.72. 3 pennies. Does 3 pennies mean a lot? Yeah, 3 pennies means a ton. You now have an island top reversal at the highs out here. And much like what we saw inside of the diamonds here, you'd go back, you could find that abandoned baby top inside the SPY, and that is right here back on July the 7th. So it's not a guarantee of anything. But if ever one was looking for a reason to be more than just cautious out here, if the trading session ends down today, you most simply got that message here. And we are also in the 6-month unfavorable seasonal cycle out here. So it is one to really be paying close attention to. Of course, inside of the Russell 2000, which has really been the weak link out here, if we take a look at the monthly chart. The monthly chart here shows a price relative strength divergent pattern because the RSI level reading back on the month of December 31st was 77.68. Makes a higher high with the doji at 73.48 as the RSI reading. Little doji candle up there. You then had the leaves falling off of the trees out here, meaning a lower close in the month of April. That was a reversal signal here. It was an evening star. It was bearish engulfing. It was a price relative strength divergent pattern. You're getting a lower push through here this morning. It says that the Russell 2000 now on its monthly chart probably pulls back and tests the 1008-ish level, the bottom of its rising price channel out there, and that is what's likely in store inside of the Russell. So we've got bearish patterns. That is the soup du jour being served up to us this morning by the markets. Let's go check out what's going on now inside of the different sectors inside of the S&P 500. Inside the S&P 500, the XLV, so far, this is just getting back inside of its downtrend line out here. That downtrend line coming from the March 6th high. So much like the NDX 100 and the composite topping on March 6th, right now that's what the healthcare sector has done. If you take a look at the high here from April the 4th, you can see that if you use that as your trend line, price is now back inside of the trend. That says that price ought to move down back to the lows of February 5th, or at least the high of February 5th, $55.47. When we get back from this break, we're going to go look at the other 9 sectors out here, see what kind of patterns we see if there's any island tops inside the individual sectors. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released.
The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow off 140 and counting. S&P down 18 points. The NASDAQ off 46, and Russell 2000 leading the charge, down 1.5% here this morning. I'm going to switch over. We'll go back to the sectors inside the S&P 500 in a moment. One of the things that I was noticing here when I took a look at the SPY chart out here, the SPYs have got some volume to the downside today. So far, we've only been trading for an hour, right? 1 hour of trading. 48 million shares have traded hands today. That's going in basically against the breakout from a couple of days ago on May 12th that had 87 million shares for the entire trading session. So unless everybody just simply goes on vacation, which is probably not the case. In fact, probably most folks are listening to TFNN here, and they're saying, oh, man, we got some island reversal patterns. We got the Russell 2000 down below the 200-day moving average. We've got the synergy with regard to potential top dates, the way that the markets make tops out there. We got the Euro-Japanese yen moving down. What's next? What is it? The VIX is going to be above the 50-day exponential moving average? Yeah, that's probably what is next out there, so that's something for us to be paying attention to. But inside the SPYs, we've got volume that is moving down as we speak here right now. With regard to the other ETF structures, the diamonds as an example, 2.5 million shares so far in an hour of trading. 4 million shares was what it did as it broke out on May the 12th out there. So inside the diamonds, you've got volume. The only thing really not completely participating here is the Qs. So that is the that's peculiar. The Qs here down with 17 million shares. That's going against, still has volume. So it does have volume. I take that back here. It was 38 million shares to the upside on May the 12th out there. No diamonds inside the Qs, just the SPYs and the diamonds out here. The Qs did not form an island reversal pattern. Does that matter? No, it really doesn't matter. We know the Russell is weak and continuing to weaken. In fact, if I take a look at the IWM for volume, we ought to do that. See what's going on inside of the weak link out here. It is now trading down to the lows, it looks like, of February 5th. 107.27. Now there's 60 million shares down there. So far, the intra-session low, 107.44. So it has not tested that low. 60 million shares is the volume it's going against today. It's done 25 million shares. So it's got enough volume if it certainly keeps up at this pace out here. So it's moving into that area with volume. What does that set up? It breaks that area, sets up an A to B equals CD to the downside. A pretty large one, looks like to me. 76 million shares. You just need 76 million shares or more to set up an A to B equals CD to the downside out here. That would actually give you a price target and projection right around 100.04. That would make sense. That would be the bottom of this rising price channel that price has been in ever since the March 09 time frame inside of the IWM. So it looks like that is where she wants to head to, right around the $100 level. That would be your 1 to 1.272 A to B equals CD to the downside. Now, with inside the spiders, let's go see what's going on inside the spider. ETFs out here, the sectors, the XLF right now down this morning, 9 million shares. It's a swing point is where it's headed to April 11th. That's got 79 million shares, so not too bad volume-wise inside the XLF as we speak. The sky does not appear to be falling there just yet. Let's see, we did the XLF, we did the XLV. Let's do it this way. It's easier if I do it this way. Let's take a look at the XLB. The materials sector out here. Formed a little doji candle yesterday. It is now down with 1.3 million shares going into a breakout with 4.5 million shares. So this seems to be having some volume off of the highs out here. So that is really the signature pattern that it looks to be forming as we speak here today. I would say that price ought to come back down into the April 15th level, right around the 45.92 to 46.71 area. So we'll be looking for, in many of these, we'll be looking for volume today, volume off of the highs. Let's take a look at the XLY. The XLY has been struggling. It's on its way to perhaps forming a larger A to B equals C to the downside. It needs to bust through the April 15th swing point. That has volume of 9.6 million shares. Trading into it today with 2 million shares. So it's got volume here today inside of the XLY. If it breaks through that area with volume, that sets up a 1-to-1 A to B equals CD that would take price down into about the 58.93. But this is the C point of an A to B equals CD. And thus far, volume continues to pick up to the downside. It needs to crack this high volume low. That's going to be February 4th. That is a price level of 61.42. But boy, if it breaks through that area, it's going to do more than a 1-to-1 A to B equals CD. It probably gets all the way back into the August 2013 time frame out here, right around $57.31. That's on the XLY. If we take a look at the utilities sector out here, just kind of a stable day out here. It's not certain what to make, but this is the area. This is one area. Here's a defensive area, and then it's actually acting somewhat defensive as we speak right now. That's on the utility sector. If we take a look at the XLP out here, the XLP this morning down with volume of about 1 million shares, going into a swing that's got 4 million shares and a breakout with 7 million shares. So the XLP, that's the consumer staples, that XLP, sometimes I get the consumer staples mixed up with XLP. What is that? Yeah, consumer staples area. So it's, acting also a little bit defensive as well. Let's take a look at the, so far the healthcare sector back inside its range. That's given one of the weakest signals out here. We're going to finish this up by taking a look at the energy sector and the technology sector out here. So the energy sector, which has been strong like bull, this morning down with 3.9 million shares here. This thing has really been, let's see, what it was down with last time, 10 million shares. Let's see what this thing is really going into. So it hasn't. You got some volume coming out of this. as far as any kind of real significant reversals or what have you, it's probably the energy sector is not the one. Let's take a look at XOM. Let's take a look at ExxonMobil here, see what pattern it might has here. Probably the energy sector, not really the one that you would take a look at necessarily shorting. So inside ExxonMobil, it is potentially taking out or trying to take out a B point here of an A to B equals CD down. So this could change your mode if you like the energy sector from a short standpoint. 101.26 is the number to be watching. That would set up a close below that with volume, would set up at least a small A to B equals CD to the downside. 8.9 million shares. They've got 3 million. So ExxonMobil has volume this morning. If it closes below 101.26, the A to B equals CD pattern on this would take it to a price level, 100.52, maybe 99.93 out here. So the energy sector, let's take a look at let's go take a look at the technology sector, the XLK, see what it is doing here. So far this morning, down with volume of 2 million shares out here. It's going against a breakout with 5 million shares. So you're seeing some movement to the downside here this morning with some volume. We'll know by 4 o'clock whether or not this volume keeps up, accelerates, or decides what to do. But nonetheless, what we do have in the markets, what we know we've got a island top reversal inside the New York Stock Exchange at all-time highs. We have that same pattern inside the Dow Diamonds. We have that same pattern inside of the SPYs out there. And as we took a look at and going back through the charts out there, that is something to truly be paying attention to. Make sure that you have stops. If you are long this market, you've now just gotten the most bearish reversal signal possible. It doesn't mean that you have to. Remember, it depends on the time frame that you're looking at and that you are trading on. But on a daily basis, you just got one of the most bearish reversal patterns that you could ever want. Just like on the other side, if you can find a bullish pattern, an island bottom, that's an area where candlesticks can have a ton of meaning out here. They do have a ton of meaning when you've got the reversal at the top. As I also said, if those highs ever get taken out, boy, that just tells you it is just simply long and strong. That's how powerful these reversal signals are. Now let's take a look here at things that are moving inside the marketplace as well, to the upside and to the downside. Let's go take a look at Priceline. Now, Priceline, let me go into my core holdings. I believe I have it there. I think Priceline hit the top of its trend line, downtrend line out here. Yes, it did a couple days ago. I think we looked at this yesterday or perhaps on Tuesday out here, as Priceline has been in a downtrend after it made its high back on March 6th. It topping as well with the NDX 100, the composite, obviously out here. So this has really been helping to lead the charge to the downside. Now, the swing point that it was not able to bust through, moved into it with volume. That is the February 5th swing point, only 533,000 shares, and that was hit with volume on May the 8th. Couldn't bust it down, and when it tried to bust it busted it up as far as it could get, which was into the descending trend line out there. So that says you're trading inside that May 8th area. That low, 107.26, will be or should be tested out here. That is inside of Priceline. If Priceline breaks through that, the next volume bar really that it has out here to find some support. Not too much further down. It's really right in the 1,020 level to about 1109-ish or so. But Priceline is leading dollar-wise. Of course, that would make sense, being a $1,000 equity here to the downside. We've got Chipotle's down 1% here. Let's take a look at Showdown. Let's take a look at Alliant Tech Systems. ATK is the ticker symbol out here. ATK. There we go. Let's go see what it is doing. So this is down this morning. Looks like it's got some volume behind its move. It completed a 1 to 1.272. A to B equals CD to the upside. Let's clear the decks out here. This thing had, this can't be right. This had volume bar on April 29th. They've got some type of corruption inside here, so I'm just going to skip. Well, I don't have to do that. We can pull up. I've got two other charting packages that we can use, right, Steve-O? So let's go do that. ATK is the ticker symbol. Let me come over here. This one's going to populate a little bit slower. So while that is populating, while I let that populate, that's the e-signal system. Let's go see. Take a look at something else here that is moving. Let's take a look at Chipotle. Let's go see what we've got inside of Chipotle. It's been on fire out here. It's at all-time. No, it is not. I take that back. What was I thinking? It was not at all-time highs. Chipotle here pulling back right now. It's trading out at $4.97. Of course, this thing had a real big, here we go. So with Chipotle had a real big downdraft day. I believe that was an earnings time period. That was on April 17th. And the low of that area, you got big volume, 3.8 million shares. The low of that is 518.52. And all price did was ran up and it ran right into that supply line on May the 5th. It got up to 518.54. Thus far, it has been giving it back. Looks like what Chipotle is likely to do is come back and fill this gap here, get back into it's a sign of strength. That's all that a gap is, because that's where you've got wide price spread. In this case here, you had wide price spread and accelerated volume. That says that Chipotle ought to get down to about the 438.05 range out there, currently trading at 496. Now let's go back and take a look at Alliant Tech Systems. That should be populated here. And we'll go take a look at patterns. Let's take a look. It's the daily chart, I believe, that I was looking at. So let's pull that up on my screen. Yeah, there we go. So it had a little shooting star candle out here, but it did have high volume on that breakout. So it's now, this has come back to that breakout area. The breakout was on the trading session of April 29th. The volume out there was about 1.3 million shares. So far this morning, it's got volume to the downside of 423,000 shares in an hour and 15 minutes. So it's now coming back into its breakout area with too much volume. This thing here on the daily chart below, it broke through it today here, below its unfair low. That says you would not want to be long on the daily time frame. Let's take a look at the weekly time frame. Weekly time frame says it ought to, or it's going to seek support at about 123.34 to as low as 112.50 out there. That is the weekly market profile, and that is ticker symbol ATK. Alliant Tech Systems is the name of the entity. Let's see what else do we have moving in the market out here. Let's take a look at anything moving to the upside of significance. Kindred Healthcare, it's up 5%. That looks like a buyout, so I don't want to take a look at that out here. Let me just see what else we got. We got Textura Corp. TXTR is the ticker symbol. So that is Westpac Construction, a Textura client, reaches 500 project milestone. Well, it certainly is. TXTR is a ticker symbol. Let's go see what it is doing out here. Let me change over to this package. TXTR is the ticker symbol. I want to take a look at what is it that's trading up today here from a strength standpoint. You got Cisco is actually trading up 8% as we speak right now. So this equity here definitely fell from grace. It made a high back on October 1st. It was trading up at $47.25. It made a low here a few days ago, down at $14.30 out there. That is getting whacked. This thing is going to try to trade up, though, into its supply lines out here. Probably, you probably have to say right around the area of $25.59 out here. It's trading out at $18.58. Dow's off 144, S&P down 18. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. So the Dow is off about 0.9%, down 143. S&P is off about 1 full percentage point, off 18 points. NASDAQ Composite now down 1 full percentage point, off 41. Russell 2000 down 1.5 percentage points, off 15 points. NASDAQ 100 off 0.8, down 29 points. New York Stock Exchange down 0.9 of a point out here. We got net decline in issues at 1585 out there. The S&P Volatility Index up 9.5% right now. Let's go check in on that. It looks like the NQ out here wants to. It's down with volume. You can see on the 120-minute time frame we're into the oversold territory out here. So at some stage here, we ought to see the market move sideways to bounce a little bit. Don't get your hopes up here at this stage. I mean, it would have to stage a huge comeback today and get rid of those island reversal patterns out here. So what you would see here, it's just like a rubber band. The market can only stretch so far for so long. And then it has to ease that stretching here. So how that stretching, how that oversold level gets handled, moves sideways are always more bearish in a market that's moving down and oversold, and markets that are in a bullish mode and are overbought that move sideways. That is typically a more bullish outcome out there. Now, I did mention the VIX index here, and I also mentioned that it was up 9.5%. So what we know about the VIX, it's trading at 1333. The 50-day exponential moving average, that is priced at 1389. Now, getting above that, ordinarily, getting above that would be very bearish. When the VIX is above the 50-day exponential moving average, that's when carnage can be done to the markets out here. Now, if that were to occur today, and it very well could, so if it were to occur today, that would give you a VIX index, a one-day rate of change of greater than 10%. So what does that mean? How do you trade that? Well, it's really simple. What happens, like, since the 2012 time frame, like 80% of the time, I don't have the exact number, but 80%, I'm not far off. Since the beginning of when the VIX was created, it's like over 65% of the time. When you have a one-day rate of change in excess of 10%, you get a market, some type of market bounce, slow down, pause, bounce within a 48-hour trading session out there. Sometimes it happens in the futures market, and then you start to see the market opens up and then sell off from there. But that's how you would be taking a look at it. The most bearish thing today, I don't know if this is what the bears want to hear or not, the bulls want to hear. The most bearish thing today is that the markets finish somewhere like around here, and that the VIX doesn't get more than a 10% one-day rate of change. The VIX index finishes somewhere right around here, 1335, 37, 38, something like that. That would then say, because we've seen some volume accelerating the downside inside the ETF structure, of course, we'll know more at 4 o'clock today, because the VIX would then begin moving higher, would not have that one-day rate of change of a 10%. That would be the most bearish outcome that one could expect out here. And so like the most important thing you can do when we take a look at these patterns, what they have done in the past, the saying, the expression, the past does not equal the future. Well, unless you want it to out there. You know what? We know enough from the past in these patterns that they provide great trading opportunities and great signals with regard to what goes on in the market. So today, May 15th, is a really important trading session out there, and I want to express my thanks for each of you for always being with us here at TFNN. Full lineup today with it being Terrific Thursday. That means our man Basil Chapman is up next. He's going to tell you where we're at in the wave form out there. After Basil, we got our man Daryl Martin, David White, we got Andy Heck, and the Tom O'Brien Show from 4 to 6. Have a terrific Thursday. Be careful out there. Use stops, no matter which side of the market you're trading. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.